And that's why I took so long, because I didn't take a financial advisor also. So that was a huge mistake I did. Now, going back to the issue of 90% of traders losing in their first 90 days. I don't want to go deep into the technical aspect, but the reason with my experience with providing knowledge to a lot of people, is the issue of economic cycles. So in a typical investment market or financial market, there is an issue of economic cycles. The market doesn't move, always trending to the upside. The market moves up and down, sort of in any business, right? It's like tourism here in Tanzania. There is high season, there is low season, there is peak season. But it doesn't mean that most of the people that open the tour companies in a low season would definitely lose most of their capital. But it doesn't mean you need to stop trading. I mean, you need to stop the business. The same thing in trading. A lot of people don't understand the thing that there is an involvement of economic cycles. You need to understand these economic cycles. And surprisingly enough, most economic cycles happen in a quarter. So most people tend to go into these mentorships where they learn about trading within 2 weeks. So not knowing that within those 2 weeks, they're learning in a certain economic cycle. When now the economic cycle changes, these guys start making losses consecutively, not knowing that you don't really need to change the strategy. You just need to change your approach to that, So that is the main reason, on my view, that causes a lot of people to lose money. So all that drives back to the issue of resilience. If you're trading, if you're in investment, just make sure you survive the next day.
Life in general, what do you think about someone not being resilient, someone who's scared, someone who's so weak-minded? What advice do you have for such a person?
I mean, at the end of the day, we're all going to die. So why not be resilient? Yeah,
that's true.
Right? Why not be resilient? You've already tried not being resilient, so why not try being resilient?
True.
So you have been talking about two concepts, trading and investing. Most people don't understand the difference of the two, between trading and investing. Can you please elaborate what is trading and what's investing?
All right, investing simply means you taking your money and placing it in a fund, if not a fund, in a company. That these companies are known as money managers, okay, or fund management companies or hedge funds. So that is you investing, leaving it there and waiting for it to multiply. But in trading, you're actively in the market, you're actively participating in the market, putting in these buy orders, selling orders, closing trades, and all that. So that's trading.
So in layman terms, you can say trading is very short term and investing is actually long-term mindset.
Yes. So with the development of markets, with the development of technology, investing can also be short-term these days. Yeah. But back in the day, investing was only meant for long-term achievements. So if you look at Adidas strategic plan, 3 years ago, Adidas strategic plan was, looking for five years, them sitting down projecting 5 years plans. But recently they're projecting 3 years plans because of the change of consumer behavior, change of a lot of economies and all these forces that are affecting the market. So that sort of mindset or regime has affected all other industries, including the finance industry. So investing nowadays can be short-term, it can be long-term.
Oh, yeah. Actually the biggest takeaway that I've taken here is, first, you need to learn, you need to have knowledge, and also you need to have guidance, which means you need to involve an investment or a financial advisor. I actually remember my brother here, Monty, he actually lost a lot of money, which is just $50, by the way. And he invested it in Dogecoin, and he thought it's going to turn to $1 million in 1 month.
Financial advice is not advice correct.
Anyways, it was crazy.
You're talking about the obviously portfolio managing and everything. From your experience, do you think there's more returns abroad or in Tanzania? And what's the difference, and what could Tanzania do eventually that?
Yeah, well, okay, we can't move away from the fact that yes, there's more returns abroad more than here in Tanzania, but you need to put in the fact that the Tanzanian market is still developing. No baby wakes up and starts running. So the Tanzanian market is still developing, and we're glad that capital market also, open their capital accounts to allow a local investor, a Tanzanian investor, to participate in East African markets all the way to SADC market. So this is all governed by a body called the ASRA. Now, yes, there's potential returns more outside of Tanzania, given the fact that the investment products that are in Tanzania were only limited to equities and bonds, which is in Swahili is hati fungani na stocks,
Bonds and stocks, hisa.
Hati fungani na hisa, sorry. Yeah. Yes, so outside there are all these other investment avenues that people can dance around with their capital, mobilize their capital to achieve higher returns than what is being provided here. When we talk about inflation-proof returns, there are companies like Standard Investment Bank in Kenya providing good returns. There are companies in Nigeria providing good returns because the capital markets are a little bit advanced more than our market here, because I believe they also started a little bit earlier than here in Tanzania.
So currently here in Tanzania, what would you say are the 5 investment vehicles that someone can do? Because talking about Tanzania and abroad, I've seen people abroad invest in literally anything. Like I've seen people investing, as I said before, people invest in watches, people invest in art, people invest in gold, people invest in real estate, stocks, bonds. Like there are a lot of investment tools that people can invest. But here in Tanzania, what do you think are some of the top 5 investments that someone can look to in order to get their return?
Okay, so the Tanzanian market is very limited, as I said. We only have equities and bonds. The good thing is bonds can be divided into government bonds or corporate bonds. In other words, all these are known as debt securities. So the government bonds, ndo hizi hati fungani tutakuwa tunaongelea, the hati fungani type, they provide good returns, but they are way secure. The market is developing, and right now we have all these corporate bonds that are out. Corporate bonds are bonds that are issued by companies like CRDB. It has its own corporate bond. NMB has its own corporate bond. And I believe there is another company that launched its corporate bond yesterday. I don't want to mention data that I'm not very well assured of. So these are the only avenues that we have here in Tanzania when you talk about investing. And just to add on the question that you asked, the problem of these avenues, or sort of the limitation that we have in these avenues, is the fact that they are only buy-based avenues. To put it in simple terms is you can only make money when you buy. Okay, so in other avenues outside of Tanzania, you can make money when you buy and you can make money when you sell. So even in a struggling economy, you can still make money. But when you have a struggling economy in Tanzania, that means your bonds are going down or under. So that is also a limitation that I believe, the ones in power are working upon, creating more avenues of a Tanzanian to invest more and play around with their capital.
As we talked before, there's no any kind of investment that has no risk. That's why it's investing. But when it comes to Tanzania and when it comes to bonds, I've seen the government sells bonds. You say there are corporate bonds and government bonds. And what people don't understand is buying a bond is you are actually loaning money to the government and then expecting that when the government prints money in the future, they will give you a share of that money. I don't know, it might be 10%, 15%, depending on the amount of time. But the government is the one that guarantees you that return. Do you think that that kind of investment in bonds has no risk at all?
Yes. So, as you said, in investing, there is no such thing as no risk. But there is an issue of a safety landing. Hence the reason why bonds are a favorite to a lot of people who are not who are risk avertive, if I'm to say. So when we look at the history in investing, not only in Tanzania, worldwide, yes, there are times when the government has come to, in other countries, I believe in Japan, if I'm not mistaken, it reaches a time when now the government cannot come to terms into providing those returns. But this is a catastrophic event. It happens like once in a century or something. Hence the reason why we sort of rub the issue of investing in bonds as a risk-free investment. Even companies like UTT Amis, they provide such investment avenues where your capital is fully protected.
So, like when you say it's fully protected, do you mean it's 100% protected? Because as far as I know, even if you save your money in the bank, you can just wake up tomorrow, your bank tells you, yo, the money that you put in, we don't have it. So, do you think it's 100%?
Yes,
protected?
so it's a way that that fund is structured. So the way that fund is structured, which I don't want to go into detail, but the way the fund is structured, it protects your capital in all these avenues. Yeah, in all these risk liabilities that could be imposed into that fund.
So, a lot of people, when they're investing, they expect very immediate returns. Someone is investing today and he or she expects in a week, in a month, he has gotten his return on investment, without knowing that there are investments that take a very long time, such as maybe investing in real estate. Someone can put their money down today and expect to get it back in 10 years. So what advice do you have for this kind of people who think about short term when investing?
Or in a nutshell, I would advise them not to invest because if you want to invest, you have to be ready to be patient. So as you said, people who invest in real estate, they have a 10-year span. People who invest in bonds have some even up to 15 years to 20 years to really accumulate the return of investment. So if you don't have the patience, don't invest. You're not ready to participate as an investor. You should open a business that can provide sales directly to customers. I believe that's what would work well in terms of a person who doesn't have patience.
Oh, so what you just said, it reminded me of there's one guy who is considered to be the greatest investor of our lifetime. We all know him. He's Warren Buffett. I was studying Warren Buffett and I noticed that 90% of his wealth was made after he turned 50 years old. So the rest 10% was made from when he started. Like he started when he was a teenager. Actually, when he was 50, he only made 10% of what he had. So that just shows you the importance of time in the market, that high returns compound in the long run, not in the immediate short run.
Yes,
Although
yes.
there are some investments that can skyrocket in the short term, but it's a very
But
few.
the risk involved is huge also. So I mean, the Warren Buffett story is a good one, and I for one, I wouldn't start investing if I had I have to wait till 50 to make money. But Warren Buffett's investment plan or technique or strategy is very, very long term. The investment assets that you can participate on that can provide good returns in a year's time, can provide good returns in 3 years. Yeah, so I thought it's good to just put that out there, because to help the person who is looking for a yearly investment not to think that they can only make money after waiting 50 years.
And also, why do you think diversification is important when investing? Do you advise someone to invest in just one thing or to diversify in different stuffs?
Nice question. Yes, diversification is very important. With our current market conditions, with whatever the hell is happening in the world at the moment, diversification is very important. Not only in investing, actually even in opening a business. It is proper for a person to open maybe a head office in a certain region, do registration in another region, taxation in another region. So that when there is a catastrophic event in one of them, you can still move around with your business.